Welcome back, everyone. I'm happy today. I'm happy because one of my companies that I've made a significant investment in is Netflix, and Netflix is doing really well. We just got to see their latest report card. They had their quarterly results released just a few minutes ago, and the results are very strong. We're going to go into the subscriber ads, the revenue growth, the future outlook, the developments of the company. We're going to go into all of that in this latest earnings report, but I first want to go over the company itself. If you've been following along this channel, I have the Story Fund, which is my secondary portfolio. I have a concentrated group of companies here, Netflix being one of the most significant investments. I have $51,000 of value in this company as of market close today. Now I'm in the green by a little bit already, 5,000, so we're just slightly in the green, but Netflix just reported their earnings and it looks like the stock is actually moving a bit after hours. Right now, if we can see right here, it's up around 7% after hours, plus $33. It finally broke through the $500 range. Now, we don't know if this is going to stick. There's a lot of volatility after hours, but that's what the stock is doing currently. If we look at the headline results here, we have CNBC pointing out that Netflix added 13.1 million subscribers. Now, that sounds like a big number because it is. That's not what investors were expecting. That's not what the street was expecting. That's much higher. To give this perspective, Wall Street was expecting an aggressive number of 8.8 million. They thought 8.8 million, around 9 million. That's a pretty aggressive number. That's a lot of subscriber additions. Netflix just, they went up a lot above that. That's 55% above the expectations. 13.1 million compared to 8.8 is quite a beat. And in fact, 13.1 million breaks a record for Netflix. It's the most subscribers they've ever added in a single quarter. So this really is a lot of additional customers for Netflix. They have momentum. They're figuring something out. They're bringing a lot of new customers into the fold, one way or another. We're going to talk about the mechanics that they're doing this with. Every quarter, Netflix releases their earnings report, and I really appreciate theirs because they give a lot more information about the company, what they're doing, the developments, and I believe most companies do. They really write extensively about all the things they're trying to accomplish. In this case, if we look at the actual numbers here, they highlight this to begin with. We have revenue growth year over year in this last quarter, Q4 of 2023, of 12.5%. That is very fast revenue growth for a company like Netflix that had a problem with revenue slowing down. 2%, 3%, 2%. These numbers were bad. Netflix was in trouble, and a lot of investors were criticizing the company for not being able to grow. It was too mature. Now the story has changed where Netflix is now giving double-digit growth, and they're forecasting next quarter 13% growth. So they're forecasting even more incremental accelerated growth into the 13% category. When we look at the operating margins of the company, that's a big thing with every company, having operating margins go up over time. The operating margins went from 7%, 21. They're a little bit shaky quarter by quarter. It was 16.9% this quarter, but they're forecasting next quarter operating margins of 26%. Which are much higher than the first quarter of the year prior. So operating margins are going up year over year, every single year. So we have double-digit revenue growth, operating margins increasing. All things that I like to see. This all looks really good. Now we look at the net additions in subscribers. One thing you have to keep in mind with a company like Netflix, it's like a freeway. There's people coming in and leaving all the time. So you have subscribers that are churning away. They're leaving to other services. They're canceling their Netflix for a few months and then they're trying out Disney and then they'll jump back. There's a lot of interchange that happens here. A lot of people coming and going. But this number is the net addition in subscribers, factoring in all those who left and all that joined. This is how many they came out with. Global streaming paid net additions, 13.12 million, a record fourth quarter for Netflix, beating out all of their previous quarters as well. So to summarize all the key metrics of Netflix, the revenue's growing double digits, the operating margin's going up over time, and they're gaining net paid subscribers. Now, if we move down a little bit further, we get to the bottom line of the company, what I believe is the most accurate profitability figure of any company, which is the free cash flow. And we look at the free cash flow they posted last quarter, which was $1.581 billion. That's a lot. That's higher than what I was expecting from this company. Now, I ran the calculations on this. I actually ran them twice just to make sure, because it seemed like such a high number. But if you add up all 4 quarters of Netflix this year, they posted free cash flows of $6.925 billion. almost $7 billion. If we bring up Netflix on Qualtrim here, we can visualize this compared to prior years. We go to the free cash flow chart. We look at last year, which was 2022, $1.62 billion. It's off the chart. They're at $7 billion. So, I mean, you'd have to rescale the chart. It's gonna make these numbers down here look tiny by comparison. So when Qualtrim updates in a couple days, it has the new data in, you're gonna see that new bar with nearly $7 billion of free cash flow. I gotta say, I'm really happy with the way that this story is turning out. When you look at a company and you're doing analysis on it and you believe it's going to turn out a certain way, it's really fun to see those developments happen over time. That's what I see happening with Netflix. The financials look so strong. These results are really, really good. And even looking at the shares outstanding, another important metric for the company, the diluted shares outstanding are going down. 450 million last quarter, down to 444. So they're cranking those buybacks with their extra cash. Doing the buybacks, doing everything they should, returning cash back to me, the shareholder. I like what I see with everything they've highlighted here. So far, I see no red flags. So everything so far historically, I think looks great. This quarter was a knockout quarter, 55% above on their subscriber expectations. They grew revenue, their operating margins are great, their free cash flow is great. This was really an awesome quarter. But we want to see what their guidance is. This can kill some companies if they have a good quarter, but they give very weak guidance. They have the forecast right here. Their forecast for Q1 of 2024 revenue growth is 13%, which includes 3 percentage points of headwinds from foreign exchange on a year-over-year basis, primarily due to a large decrease in the Argentina peso. So they're actually projecting 13% revenue growth with a massive headwind. Remember that Netflix has over 50% of its revenue outside of the US, but all of their costs are mostly in the US, which means their expenses are based in US dollars, but their revenue that they earn is based outside of the US in large part. That makes them susceptible to foreign exchange currency, which in this case, they're saying that they're going to grow 13% even with the impact of foreign exchange. That is an incredible guidance. They say, therefore, we expect revenue to increase 16%. On an FX neutral basis. So if you took away money going and fluctuating from country to country, they would actually have accelerated revenue to 16% next quarter. That's what they're guiding for. Similar to prior years, we expect paid net additions to be down sequentially, reflecting typical seasonality, as well as some likely pull forward from our strong Q3 2023 performance. So they're softening expectations for the amount of subscribers gained, which I think is fine. To put this quarter in perspective, they gained so many subscribers this quarter that they could essentially gain 0 next quarter and they would still be on track. So the fact they had such a strong Q4, I think gives them a little bit of wiggle room to have a softer Q1. And normally Q1 is a slower time for them. They say, but up years versus 2023 paid net adds of 1.8 million. So they're doing a range here of between 1.8 million and below 13 million. That's a pretty big range. They're saying that subscriber count will be somewhere between those two numbers. You can try to fill in the blanks there. And then the last thing is they say that they're increasing their full year 2024 operating margin forecast from 22 to 23% up to 24%. So they're moving up their operating margin forecast a little bit in 2024, which of course is very welcome news. So if we look at these results overall, if you really boil down what's happening here, Netflix re-accelerated revenue growth to a very fast speed, faster than most of big tech at this point, growing 12% and then forecasting revenue growth of 16% before FX currency. The company is raising their operating margins every single year like clockwork while growing their revenue, growing their subscriber base. The subscribers that joined this quarter was a record in the history of the company ever, beating Wall Street's huge estimates that they already had of 8.8 million by 55%, coming in at 13 million. And while they're doing this, they're venturing and growing into new categories, whether it's the advertising tier, whether it's doing live events. They're growing like crazy. I believe strongly over time, the way that this will develop is there will be a few big winners in media, globally dominant streaming companies that will have incredibly good economics. Netflix is by far the best position to have that global scale. Think about other categories this has happened in. You have social media. Meta is the big winner. Facebook won that battle long ago. That battle's being fought right now with the streaming wars. And Netflix is the clear winner. They're winning right before our eyes, and there's still some people that are skeptical of this. I'm not one of them. I think Netflix is one. I'm along for the ride. I like seeing the developments now, and I'll continue to follow the company. So that's all for this time. I hope you enjoyed, and I'll see you in the next one.